Okay, just a minute away from the pre-open session, and we'll start to get rates and we'll get them for you. 50 points higher, so it's expected to be neither here nor there, conclusively at least. So not a very large gap, but I mean, a gap nevertheless. Ashish Chaturmota is Director, Head of Research at JM Financial. He's joining us now to take some questions. Ashish, good to have you with us here. Thank you very much. What would you do this morning if you get a 50-point gap up?
Good morning, Prashant. So I think, broadly, yesterday we tested the 200-day moving average, which is close to around 16,990 zone. And from there, we have seen some, some kind of rise in yesterday's trading session while closing also. Maybe today, again, we are witnessing SGX Nifty indicating a 50 points up. But we need to understand we have seen a gap down opening in yesterday's trading session, and now 617,250 becomes an extremely important, important resistance point. And till the time we don't see a close above 17,250, I think the market is going to be more sell on rise rather than buy on dips, because if you look at dollar index is now at 20-year high and USD INR trading at an all-time low. Yesterday we saw India VIX hitting almost 3 months high at 2190. So I think that that is creating a lot of concern. So broadly, we have recovered from 200-day moving average. So some recovery could not be ruled out. But what is important is that we need to cross 17,250 on a closing basis. Then only I think we can look for any serious reversal in the market. Till then, I think one need to be a little cautious. So keeping that in mind, we have a buy and sell both recommendations. On the buy side, we believe that Pidilite Industries is looking very strong. But despite the kind of sell-off we are witnessing, Pidilite Industries, Asian Paints, these stocks have seen some long build-up. So Pidilite Industries could be bought with a stop around 2750 on upside. 2920 would be my short-term target. Cummins we like because there's a huge build-up of positions in the stock, and in the last 2 months we have seen decent rollovers in stocks like Cummins, Siemens, and ABB. So I think keeping that in mind, we have not seen any significant, I would say, liquidation of long positions in the stock. So clearly on dips, Cummins looks interesting. 1160 would be my trading stop loss. On upside, 1300 would be my short-term target in Cummins. On the short sell, I think PBR is looking quite weak. Stock has breached multiple month lows and with a very strong OI buildup. So with keeping 1710 as a trading stop loss, I think PVR looks weak for a 1600 target. And Bharat Forge is looking weak because here we have witnessed good amount of short buildup in the last 3 trading sessions. Keep 745 as a trading stop loss. On downside, 680 would be my short-term target in Bharat Forge.
Okay, thanks a lot for that, Ashish. Have a great day. By the way, the rupee has opened a tad bit. There's a bit of a relief in the sense there's a little bit of an appreciation. 81.62 was the close yesterday. 81.46 is where the rupee has opened today. So a little bit, very minor appreciation is what you're seeing on the rupee. And on the equity markets, not too much by way of respite. The Nifty has opened. The pre-opening rates are indicating that the Nifty will be up. But let's just wait for these rates to adjust. Now it's indicating a 145-point bump up. Let's see how that goes. But Sterlite Global Ventures, which is a wholly owned subsidiary of STL Tech, has sold its entire stake in Impact Data Solutions in order to focus on the core business. In other news that took place a couple of days ago, the CFO Mihir Modi tendered his resignation. To discuss all this in detail, Ankit Agarwal, who's the managing director at STL, joins us now. Ankit, good morning and thanks for joining in. What was the reason for the CFO resigning? He joined barely 2 years ago, and any indication or timeline of when a new CFO will be put in place?
Yeah, good morning. So yes, this was as we shared in the release as well. Mihir was keen to pursue interests outside of STL, and we fully respected that, and very amicably he's moving on. We have already actively looked at external options, and our own view is probably in the next 1 to 2 months, we will conclude on a world-class CFO. So pretty excited about that. Okay, so in the next 1 to 2 months, a new CFO will be announced. Any impact on your balance sheet or any impact on your debt reduction plans because of this? No, it's not. There's no link with this. In fact, as we have been talking, we are continuously focusing on exiting our non-core businesses, one of which we announced last night as well. And in addition to that, we're really focusing on generating cash from the operations to reduce the debt. We've talked about taking the debt to sub 3,000 crores level. So that's the focus for us. Okay. In terms of selling of your non-core assets, you announced the sale of your holding in data center to focus on your core business.
Any more asset sales lined up to exit non-core businesses?
So on this one, I think it's something that was very important for us, and it also signals a strong focus. Most important is where is the management bandwidth going. So we're very, very clear that our core focus is the optical business. We also have a strong services business. So this is where the complete focus of the business will be. We've also earlier indicated that we have invested some amount in R&D on the 5G. That's also an area where we are looking at an external partner. And as we have any developments, we'll share it with you.
Any more acquisitions that you'd be looking at? You've been, moving in that direction. Anything in the next 6 to 12 months?
So as I said, first thing right now is just to consolidate and focus on our core. In our core business itself, we are adding capacity of cable from 33 million to 42 million. A lot of that will now be ready by Q3, including our US facility, which we're very excited about. And we continue to see very large opportunities in India as well on services in particular linked to BharatNet. So this is where we feel we have set up a lot of capacity in hindsight of getting 5G to roll out globally. So we're very well set up now for this rollout in India and globally, as well as BharatNet comes on, we believe we'll be very strongly positioned. So we don't see any need right now for further expansion or investment or acquisition, but of course we'll continue to evaluate in the future.
Okay, so no further expansion, investment or acquisition from these levels. 1/3 of your revenues comes from Europe, Ankit, and over there we are seeing huge signs of slowdown. There's a massive energy crisis. Has it impacted your business in any way?
So I actually believe we've, even through COVID and even last few months, we've actually seen a pretty strong demand. What's happened is, on the back of COVID, everyone's realized they need a very, very strong broadband connectivity, and that has to be on fiber. So even countries like Germany, for example, while it has so many issues on the economy side, they're less than 15% connected on fiber. And so there's just a massive push by the likes of Deutsche Telekom, even the government, Deutsche Glasfaser. So what we're seeing is a lot of these economies, they are sub 15-20% connectivity by fiber. And so there's just a massive push, very often backed by large private equity players or by the government. So we continue to see very strong demand both in Europe and US. And then of course in India, what we also believe is there should at least be a doubling of fiber demand on the back of 5G and fiber to the home.
Okay, so because of this strong demand, how much has your order book grown in Q2 so far? I mean, in Q1, your order wins were one of the highest at 2,800 crores. What's the average been so far, and what's the run rate that you're looking at?
We're continuing at the same speed. We're seeing very strong order book from our customers. They're looking at 3 to 5 year contracts with us. And as we move more and more towards cables and our connectivity solutions, they're really seeing the value in that as a way to reduce their cost per home pass. So as we move to more and more of these solutions, we're also really encouraged by both looking at securing long-term contracts as well as profitable contracts.
It's been 3 quarters of losses now that you've reported. Any idea on when you turn into the black?
We are quite positive. I won't specifically comment on Q2 right now, but we are quite positive. As we did share, 3 or 4 of the key reasons were around our container costs going up, some of the raw materials linked to polyethylene and certain gases like helium, etc. We had talked about increasing our prices with our customers by 7 to 10% at least. That has gone through, and we are seeing benefit of that. Some of that in Q2, which we will be able to showcase, and certainly into Q3 and Q4, we'll see some good upside on the back of that.
Okay, Ankit, we leave it at that. Thanks a lot for joining us. So that is the management of STL talking about exiting many of their non-core businesses and also the recent CFO resignation. They do say that they'll put a new CFO in place in the next 1 to 2 months itself. But let's get some quick calls in. The market is, I mean, it's not gung-ho or anything. There's no major recovery, but it's holding on to 17,100 for now.
I think, Sonia, because of the global cues, I think you will see a bit of an uptick to start with, and then you want to take it from there. As I said, the only issue is that on days like today, normally the first rally at some point is vulnerable to be sold into because you were down 300 points yesterday. But if you then hold yesterday's low, then there's another rally. And keep in mind, the global cues are changing on a dime, so that's also something that you would want to respect. But let's take the 9-10 calls, and then we will ask Prakash for some quick thoughts on some individual names. Sudarshan, if we open here, you will try a buy trade, and what would be your stop loss then?
Yeah, I would look to buy, and the stop loss would be 100 points for the Nifty and 200 points for the Bank Nifty. Easier to buy a call option. Coforge is a buy with a stop under 3,300.
Coforge is a buy. Mitesh, your 9-10 call?
Yeah, I'll go with the buy on Metropolis at the top at 1485 for targets of 1555.
Okay, some of these diagnostic stocks have done well. Mitesh, Sudarshan, thanks for that. Let's get back to Prakash Deva. And Prakash, wanted quick thoughts on Power Grid. With some clarifications now coming in, of course, there's this dividend yield because of which maybe some domestic funds in any case would have bought it. And this stock, before this whole issue came in, was one of the outperformers, right? But it again once again brings back the question of PSUs, right? You never know what the largest shareholder has in his mind, so that risk is always there.
No, absolutely. So you have to live with the reality that you can't expect premium valuations to ever emerge. So there's no PE expansion per se in most cases, in spite of every other metric being in place. But specifically on PGCL, I can tell you very clearly that the kind of investments that are rolling into this sector, everybody ends up going to Power Grid to finally get that last mile connectivity to substations, to the network, to all the grids. So there is no reason why they cannot keep on expanding at the pace or probably even better than that. So this overhang on this potential merger getting out is definitely a relief. But don't expect fireworks because, as I said, the regulatory overhang always puts a lid on expectations and hence valuations. But it continues to throw dividend. It continues to give you peace of mind. There's no negative surprises that are likely to hit it. And it's absolutely insulated from global cues. So there you have something which probably is a go-to stock in terms of a defensive play, if you like.
Okay, in fact, let's talk more about Power Grid now. That's one stock on our radar. Vivek is here to get us up to speed on the latest. Vivek.
Well, good morning. That's definitely the stock on the radar on, most of the trading terminals this morning. So now, the clarifications that have come in, according to brokerages, removes a key overhang. Now, remember, when this particular news development did come about, there were a couple of key concerns. What were the concerns? Number one, given the fact that capital allocation or misallocation, as brokerages put it, would have definitely led to a valuation derating. Other than that, the other key worry was the fact that the dividend yield, which was around 6%, would have dropped to around 4%. And this also led to a significant sharp price fall as far as Power Grid was concerned. So today morning, Citi has written a note on Power Grid. They've reacted to the CNBC-TV18 development. What they're saying is that the clarification removes a major overhang due to which the stock had corrected quite sharply. In fact, what they're saying is that right now they are maintaining a buy on Power Grid due to the fact that it continues to remain a safe and stable business model. The company continues to enjoy very high ROEs, and they believe that it has extremely high, almost monopolistic market share as far as the transmission business in India is concerned.
All right, Vivek, thank you very much for that. So that's Power Grid. Now, Abhishek is standing by on SBI cards. The August business cards update is here. Abhishek, over to you.
Well, Prashant, to begin with, their performance is better than the industry average on few parameters like the number of cards issued or the average spends. So while, total cards is up 2% month on month, for the industry as a whole, it has declined by 2.8%. The total spends is up 1.24% month on month, while industry level, it has seen a decline of 3%. So average spends, however, is down 0.8% month on month, which compares to a decline of just 0.2% for the industry as a whole. However, no taking away, given the fact that in terms of credit card issuance, it's the strongest in last 3 months, and they have gained market share both in credit card issuances as well as the spends. In spends, the credit card market share has increased for the first time in last 5 months. So, you can see an uptick in SBI cards today.
Okay, thanks a lot for that. So that's on SBI cards. But Sonal is here with us to tell us what GSPL spoke about at the management meeting recently. Sonal, over to you.
Well, for GSPL, the near-term demand outlook is very weak, Sonia. That is what the management says. They say it is muted across sectors as far as demand is concerned, be it power and CGD sectors, where most of the gas demand really comes in from for the company. They said that contracted transmission volumes, they've also shrunk to lower than 27 MMSCMD in Q2 of FY23, and which is much lower than the normal 30 to 34 MMSCMD that the company does usually on a quarterly basis. They also say that transmission volumes banks are unlikely to see more traction in the near term as well. So even the near term outlook is not looking so strong. However, use or pay charges, which is one of the mechanism, and trading of cargoes at lower spot prices, that is $30 per MMBTU, in an environment where gas prices or spot LNG prices are at $45 per MMBTU, could support earnings to a certain level for the company. GSPL has aggressive plans to invest around of more than 2,000 crore rupees in various pipeline expansions. So tariff and expansion plans is something which could support the earnings for the company, but near-term outlook is still very weak, on the back of which ICICI Securities has cut the EPS estimates by 11 and 5% for FY23 and FY24. They have a buy rating with a target price of 375 rupees per share.
Okay, thanks Sonal for that. Well, HCC is the other stock where there could be some attention. It's up about 6.5% in pre-open. It's the debt settlement plan is approved now. Prakash, any views here? I know no longer a big stock that we used to track, but some of these stocks where there's been some resolution have done well in the last 6 months. Would you take a point here?
This probably has certain salience that is not priced in as yet at this 13, 12.5, 13 zone that has been trading at. And it has actually never exceeded that 16, 17 rupees also in the last 4 or 5 years. So it's taken a long time to get out of this mess. But what's probably promising, Anuj, is the fact that this entire coastal project and the extension of the Worli Sea Link in that next phase that they're doing, that is a significant achievement that they could probably have on their books. So if that works out well and the salient rubs into the price, you may probably see some improvement.
Okay, Prakash, thanks a lot for your time. The first rates are in. The Nifty is up 100 points. 108 points now on the Nifty, 235 points on the Bank Nifty. So the first rates are really good. I think the market's trapped some shorts here. It'll be interesting to see if this is the zone in which you see selling or the market continues to move up. Power Grid, of course, is your top gainer, up 3%. I think we indicated it yesterday that some clarification was coming, but it's official now. So 2.7% higher on that. Infosys has been showing some signs of life for last couple of days, so that's up. In fact, that's the biggest contributor on the index right now. Tata Motors, ONGC, Hindalco, NTPC, SBI, ITC, BPCL, these are a few of the names doing well. Apollo Hospitals also bouncing back by about 1.5% higher. The Nifty's gains are now down to just about 75 points. So you do want to see, because as I said, the first gap up, there would always be some people who would want to sell. Power Grid, of course, still remains your top gainer. Bajaj Finserv is piling on some gains now, by the way, 2% higher. In fact, could very soon overtake Power Grid as the top Nifty gainer. Shree Cement is bouncing back 1.5% higher. No notable losers today. Kotak Mahindra Bank and HDFC down just a smidge, but otherwise it's all guns blazing on the upside. Couple of other names now on the downside, Lever, for example, and Hero Motocorp. But the Nifty's gains down to just about 70 points. The Bank Nifty up 170. ITC, Infosys are a couple of stocks which are really keeping the Nifty in the green. Prashant, what's happening with the broader market?
I mean, things are quite okay. So Power Grid, of course, 2% higher. There is, yesterday's listing, I think Harsha Engineering, 2.5 higher on that one. Decent volumes. SBI Card, of course, we've been highlighting with Abhishek, 3% up. We've got KPIT, which is up 2%. We've got the management of KPIT joining us later on the show. HCC, we were just discussing, 9% up, 13 rupees 30 paise on that one. Ease My Trip is up 2.5% on volumes, decent volumes. Tata Investment Corporation is up about 2.5%, 23.27. There is Mirza International, which is up about 3.5%. Minda Industries is up about 2.5% right now, 541. And there is Quick Heal, which is starting about 1.5% higher as well. So that's broader markets and what we're seeing. Embassy is stock where there is Blackstone, which is going to sell stake. I mean, I think we should be able to put out data in terms of it's a large one, $300 million, $325 million, done at a very small discount to yesterday's closing price. So 346 on Embassy, big. I mean, I think it's already done. Big, the largest volume traded name so far this morning. Bharat Forge is down 1%. Nazara is down about 3%. So it's not a very large cut. It's lower, but not down and out. So 76 points is what the index has got right now. Look at something like a Shakti Pumps. If you can look at the intraday, it just comes up on my screen because it's just saw a super large move. The opening rate on Shakti Pumps was 14% higher out of the blue. It doesn't figure, at least when we mention stocks right to the word go. Look at that. And it's now settled about 6.5%, 7% up. So 519 or so is where Shakti Pumps it. Sonia.
A couple of more stocks, right? M&M Financial continues to be under pressure. So now that stock is down almost 15% for the month and down almost about 1% today. Samvardhan Motherson is trending a tad bit in the red. Ashok Leyland as well. A little bit of profit taking is what you're seeing on Ashok Leyland. But largely, you'd have to say the market is holding up. The Nifty is up 110 points. It's SBI Cards that's reacting to its good data that's come out for the month of August. And apart from that, the new listing Harsha Engineering that had a very strong run yesterday, it's now up almost 3.5%. So day 2 is also looking pretty good over there. But Nilesh Shah, the MD and CEO at Envision Capital, joins us now to talk more about the market as well as what he sees as the way forward. Nilesh, hi, good morning. Before anything, I have to ask you your view on the IT space because it's been a crunching bear market over there, especially for the large cap IT names, and seems like no respite on the horizon. What would you do at a time like this? Would you look for opportunities or do you stay away?
No, clearly the IT sector has faced the brunt. Margins, which of course were at a record high right through the calendar year 21 and early part of calendar year 22, are kind of moderating. But having said that, the valuations, the P multiples have become a lot more reasonable. And our view is essentially that don't expect the margins to further deteriorate from the current levels. The demand environment still is pretty much intact. We've not heard of any IT companies talking of any slowdown in terms of demand. Even if we reflect back to the past crises which markets like the United States or Europe faced, even in that kind of an environment, the demand for Indian IT services companies was pretty much non-discretionary. So to that extent, we now see an environment where the demand is intact. The margins perhaps have moderated or have bottomed out, I'd say, and valuations have become a lot more reasonable. So from here onwards, we don't expect the IT sector to be an underperformer. It has been an underperformer right through this entire calendar year, but from here on, don't expect the IT stocks or the IT sector to fall more than the market. So if the markets were to fall 10%, maybe yes, the IT stocks will also fall 10%. But don't expect it to kind of be an underperformer from here on. And I think it's a good time to start accumulating a lot of high quality, growth-oriented IT stocks.
Okay. Nilesh, hi, good morning. What about the market overall, Nilesh? Because, we have the US, which is now testing its June lows. Our market, of course, has outperformed by some margin, actually. Do you think this outperformance sustains?
Yes, the outperformance is likely to sustain, Anuj. Maybe it's quite possible that some of this outperformance will get shedded in sooner rather than later. It's quite possible given the kind of outperformance we've had. But I still expect India to be an outperformer in context of what's happening globally. Just look at some of the growth estimates. The fact that GDP growth is still expected to be 6 to 7%. Inflation is going to be still subpar what we are seeing in developed markets. And at about 6 to 7%, we're still talking of nominal GDP growth of about 12 to 13%. And with margins now expected to improve because of the way commodity prices have fallen or the raw material and input prices have fallen, expect margins to probably kind of hold up or even get better over the next 2 to 3 quarters. So overall, the way we look at India is that we see a nominal GDP growth of about 12 to 13% and maybe an earnings growth which is in probably the high teens. Now, that's something which not too many markets can really kind of, in a way, talk about at this stage. So I think on the back of all of that and the way our macros are getting managed, the way policy initiatives are being undertaken, it's quite likely that India will continue its round of outperformance versus rest of the world.
Nilesh, sorry, just to kind of pick up the point on IT, there are some who believe that growth rates for IT services will be back to pre-COVID levels. So multiples should also, why should multiples be significantly higher than pre-COVID levels? How do you respond to that?
So it's going to be different companies or different pockets of the IT services space will probably have different kind of growth prospects. So yes, of course, the top 2 or 3 IT companies, which of course are dealing with a very large base, will probably see growth rates of about maybe 10 to 12%, which still I think is pretty good in an environment like this. But there are going to be several pockets which are there in the tier 2 IT companies, which probably are dealing with areas like ER&D or mobility or design-led services. These are businesses which will still kind of grow at probably rates which are higher than the pre-COVID rates, which means that their growth rates could comfortably be at about 15 to 20%. So clearly, I think in that kind of an environment, and even when the world is talking of a recession, if you can still have revenue growth of maybe 15 to 20% and can sustain earnings growth as well at 15-20%, I think the case for maybe in some of them to enjoy P multiples, which are probably even higher than where they were at pre-COVID level, I still think that would continue to be the case, because the bottom line is that these are companies which still generate huge amount of cash flows, they are capital efficient, and the runway of growth for them is still incredibly long and large. So you're going to see these kind of some of these pockets getting still continue to rewarded very well. And mind you, some of these stocks have come off by 30, 40, 50%. To me, that seems to be an opportunity in the current kind of environment of a bit of pessimism there.
Okay. Well, one sector that is seeing a big pickup in demand and has coming out of a multi-year bear market is autos. Even as we speak, M&M, Eicher Motors, Maruti saw over 57,000 units of bookings for their new Grand Vitara. Is this a space that one can still get into, and how do the valuations look now?
Oh, absolutely. It's still kind of autos continues to be one of those, opportunities of growth from an India context. I think combined basis autos and auto components is a space we've been pretty optimistic about. We've been owning it in our portfolios and continue to like this space. Of course, some of them have, of course, run up quite a bit, especially in the auto ang space. So, of course, you could probably, take some profits off the table. But otherwise, it looks that for the next 2 to 3 years, Indian autos and auto components put together are kind of going to be on a comeback trail. Some of it is priced in, but I still believe that the margins are going to go a lot better. Some of the past challenges like chip shortages or higher steel prices, higher raw material prices are probably now behind them. So I think we're getting into an environment where we could probably see a double-digit growth in demand backed by margin expansion, which I think is pretty good in terms of earnings growth from a 2 to 3 year perspective.
Okay. Nilesh, the other space which has done well is specialty chemicals. Do you like this space? Even after the run, and any specific names that come to mind?
It still looks good. Specialty chemicals, yes, has run up quite a bit. And one will have to actually see how the demand environment is going to really play out globally. If we are talking of some kind of a recession globally, or demand is going to fall off, one will have to really see how it impacts specialty chemicals. So it's going to be a bit of testing times, but some of the specialty chemical companies do have long-term contracts. So there's a very strong visibility for maybe a few years from now. So to that extent, I still think that specialty chemicals is a good space to kind of look upon. And I probably believe that all the frontline names out there on specialty chemicals still kind of continue to be good investment opportunities.
Any big trigger that you see here on which could lead to, EPS getting upgraded for the Nifty? I mean, we've been talking about how corporate profitability, profit to GDP ratio is now at a decadal high. So a lot of brokerages have sort of raised their EPS estimates for the full year for the Nifty. Would you do the same, and any other triggers that could lead to that?
Well, the case for EPS upgrades, I still think continues. What's really been surprising is the way the prices of commodities have fallen off. Even this morning I was reading that palm oil prices are probably at 1 year low or 2 year low. I mean, just about 3-4 months back, we were talking about how palm oil prices are basically kind of raging. But clearly the fall has been, in fact, even much more sharper than expected. So this, I think, is extremely good news, especially for some of the consumer-facing companies. We talked about autos. We just kind of alluded to IT, where basically the margins perhaps seem to have already bottomed out. So I think on the whole, it looks to be a case that, driven by essentially falling input prices, margins are set to expand, which makes the case for EPS upgrades going forward for the Nifty basket and for companies in general. So I still continue to believe that maybe commodity prices can still fall a lot more than what they have fallen already. And that could be a hugely positive surprise for India and Indian companies.
All right, Nilesh, we'll leave it there. Thank you very much for joining us. Great speaking with you here on the program on CNBC TV18. Thanks indeed for that perspective. Well, let's move on. REC is the next company we are going to be speaking with. We reported, and this is a CNBC TV exclusive, this is a clarification which our colleague Sapna Das put out yesterday. REC will continue to be a PFC company. The Power Ministry has rejected REC's proposal of selling PFC stake to Power Grid. I mean, there was a lot of market movement in the Power Grid stock on the back of it. Markets did not like it. But I think yesterday there was a big reversal which did come through after this clarification which we put out. We have Mr. R. Lakshmanan, Executive Director at REC, now joining us to talk to us. So thank you very much. Good morning. Great to have you with us here. Could you tell us a little bit about the background to this story? I mean, where did this really come from? Was there a serious consideration which did take place? The Power Ministry considered this and then looking at the merits and demerits rejected it. Just a bit of background, sir.
In fact, PFC acquired REC stake, what the government was holding, I think in 2018 December. And after that, overall, REC has been functioning as a subsidiary of PFC. However, government was having direct control on REC. And in the meanwhile, there were options that were explored. In terms of who else could be a suitor for REC, but in balance of things, I think yesterday Ministry of Power took a call that status quo would be maintained.
So there was it was given a serious look, and then it was decided to kind of keep it as a subsidiary of PFC.
So probably Ministry would be able to comment on that better in terms of how it was evaluated and what. So from our position, I think it will be difficult to comment on that.
Okay, Mr. Lakshmanan, good morning. But is this still on table or is this now off for good?
I think as per yesterday's clarification, I think it is off.
So so now REC remains PFC subsidiary and will continue to operate like that.
Yeah, that is the position.
Okay.
Nothing changes with regards to the business, right? Just trying to understand what is the outlook now on the power sector, because renewables are gaining some bit of pace. What do you see as the way forward?
In fact, overall, REC has been trying to diversify its current portfolio mix of lending. The Q1 had a 48% increase in our renewable disbursements. And going forward, I think there is a lot of focus on the overall net zero business that is coming up and the climate transition that is happening. So that is one space where a lot of diversification is being planned going forward. And the other thing which is happening is we got our Maharatna status very recently. So that also improves the financial and operational autonomy for REC as a company. So that will also help us, push forward in terms of diversification. And another key development which has happened is in terms of the object clause amendment, so which now allows REC to look at the infrastructure space as a whole rather than power sector alone. So that will also throw up a lot of opportunities for us to grow and diversify.
So on an average, what kind of disbursements do you see? If you look at the breakup in Q1, the generation space was under pressure, both quarter on quarter and year on year, although renewables did very well. Transmission distribution also was under a bit of pressure. What would the average disbursement growth be for the full year?
For the current year, I think Q1 has been a little bit of slow, but Q2 is, I think, would be better than what Q1 was. And full year, I think, it's difficult to give a guidance, but then it should be much better than the last financial year as a whole.
No, overall, what kind of numbers? I think just to go back to the proposal which has now been rejected, this power grid thing, one of the things was to increase the share of PFC and REC in terms of lending to the power sector, which was about 24-25%, which before the merger, before the acquisition of the stake by PFC, it still is, combined share is still around there. Has there been, yesterday, have you heard anything from the Power Ministry to kind of step up lending to the sector? I mean, and what are targets for you looking like now?
Current year, I think, one of the major initiatives of Power Ministry is the, late payment surcharge rules, wherein we are supporting the, states and discoms which need a transition funding. So that is a, business opportunity which both REC and PFC are looking at and supporting. And other key thing would be like for the current year would be the revamped distribution sector scheme, wherein like close to 2 lakh crores worth of sanctions have been rolled out. So there is a business opportunity for us in terms of doing the counterpart funding for the scheme. So these are two major things where the government's objective is, and we are also supporting it. But otherwise, like in terms of diversification, I think we have sanctioned a major loan to Mumbai Metro. So that is a first project for the metro segment that we have done. And similarly, like the Nuclear Power Corporation, we are in advanced talks with them for sanctioning one of their projects. And similarly, like Kerala Investment Promotion Board. So there are multiple infrastructure projects which we are supporting them with. So these are some of the major projects that are coming through in this current year. So going forward, I think the next 3 quarters should be better than our Q1.
Okay. So that's for the 3 quarters. But Mr. Lakshmanan, in general, you can see that the power sector, which went through without any investments for a good decade or so, is now beginning to see a lot of investment. So structurally, do you see better times for you? The next 5 or 6 years, do you see to be better than the last 5 or 6 years?
One thing which is happening is like in terms of the overall as a country, the commitments that we have towards greening of the grid and the energy mix transition that is happening. So that's a space where we see a lot of investment that is likely to happen over the next 5 to 7 years. And that's a space where we are building our capacities and strength also. And similarly, like on the newer technologies and energy front in terms of energy storage, both in terms of farm storage and battery storage, and even we are looking at projects on the EV side. Then further on green ammonia and green hydrogen. So we have started looking at a couple of proposals. So these are spaces which are exciting, and we believe over the next 5-7 years there will be a lot of opportunities that will come our way.
Okay. Can you tell us a little bit about the exposure that you have to discoms? Because, there is a lot of pressure over there. How much is the risk in terms of what is the kind of credit risk that you see because of your exposure to discoms?
As of Q1 end, our distribution exposure in terms of the loan book is close to 39%. And out of that, I think close to maybe 15% would be towards non-capex. So, and out of that non-capex, I think close to 90% is guaranteed by the state government. So that in terms of, even in terms of the RBI guidelines, so that is that gives us a good comfort in terms of risk-weighted assets. And in specific cases where we find that the distribution companies are stressed, so we have taken the commitment of the state governments to even service the loans. So that actually covers our risk in terms of where we find that they have any stress on their cash flows and balance sheet. But the positive thing is in the financial year 22-23, the discoms across the country they are putting their things in order, especially in terms of the tariff. If you see all the major states have got their tariff orders out. So that is 90% of the states have got their tariff orders and even the true-up orders in place. And most of them have got a tariff hike also. So this is mainly on account of the revamped distribution sector scheme, which has certain set of pre-qualification conditions. And it also pushes for cost-effective tariff. States like Tamil Nadu, they have got their tariff order, I think, after a gap of 7-8 years, and they've got a 6% tariff hike. And they've also put in place a multi-year tariff with automatic escalations. Similarly, Andhra got a 10 to 12% hike, Telangana around 13%. So these are good signs and which will strengthen the cash flows of the distribution companies. And another key thing which I would like to add is in terms of the revamped distribution sector scheme, the states have committed with the backing of their state cabinets, that close to 110,000 odd crores of the subsidy receivables and the government department dues that are receivables to the discoms, they would be liquidated over the next 4 years. And in terms of that, as we stand today, FY 22-23, states have made budgetary provisions in their respective budgets for liquidation of the current year installments. So these, couple of things, and plus, the finance ministry has an additional 0.5% borrowing in terms of GSDP to these states, which is linked to power sector reforms. So last year, 12 states had participated in that, like the major states, like which are Rajasthan, Uttar Pradesh, West Bengal, Tamil Nadu, Andhra Pradesh, and Assam. So they've committed that they will take over the losses of the discoms, whatever is the financial loss year on year, in a graded manner. So current year they will take over 60% of the last year losses. So this again is a
Mr.
financial
Lakshmanan,
support.
sorry to interrupt you there. No, so this is a great news for the sector overall, because distribution losses have been a big thing, right?
That's right.
Dues payable, etc. But it's still a political subject. Are there enough with this the distribution revamp scheme, the late payment surcharge? There are, I think you mentioned another scheme as well. Do all of these put enough guardrails that discoms don't once again, states don't once again fall into financial indiscipline? I mean, are there enough guardrails against it? Does it ensure it, in your opinion? Briefly.
I think so. Like all these things taken together, I think there is enough, framework for the discoms and the state governments to, be on track. And the last 2 quarters are, indication, if it is anything to go by. In fact, the late payment surcharge rules, when they kicked in, the number of defaults were quite high. And today, like hardly 2 or 3 discoms are under regulation, and rest are paying their dues on time. And whatever installments were to be liquidated. So last 2 months, the installments have also been liquidated by the distribution companies.
Mr. Lakshmanan, how is the LPS, the late payment surcharge? You said it's an opportunity for you as well, because you convert these dues into EMIs, right? For discoms.
Yeah. So basically the, arrears, which were outstanding as of June 22. So there we have supported 5-6 states, both REC and PFC. In terms of helping them liquidate it in the next 3 to 4 years, depending on what is their trajectory.
Okay, Mr. Lakshmanan, we'll leave it at that. Thanks a lot for joining in and giving us an update on the business. That is REC. The market, by the way, is still holding up almost about 92 odd points. The Sensex up 340 points. We'll get to our special segment, charting trends, on the other side of the break. Gautam Shah